Hello and a very warm welcome extending to all of you for this Commodity Ki Pathshala brought to you by NCDEX, IPF Trust and Moneycontrol. Well, the theme for discussion today is the annual budget 2021-22 and the focus that it has on agriculture as a sector. Well, we did hear a lot about agriculture this time. Agriculture actually has been a focus for last many budgets that have been presented, and this budget was no different. So we did see Operation Green scheme, which has been extended from 3 commodities to nearly 22 now. This is an export-oriented scheme. We also saw a lot of focus come in for warehouses, post-harvest, cold chain, etc. also find mention. And then, of course, the agriculture credit, which was extended to farmers, dairy, husbandry, and fisheries as well. That also found mention. There is lots to talk about really on what came around in this budget and how would it really impact various stakeholders when it comes to agriculture, including the exchange, including the various traders, corporates, manufacturers, etc. And what does it really mean for economy overall is what we will discuss in our panel today. Joining us to talk about all of that is Mr. Ajay Kakra. He is Executive Director, Agriculture and Natural Resources at PwC. We're also joined by Mr. Rajnikant Rai. He is Divisional Chief Executive, Agribusiness ITC. Jatin Singh is founder of we also are joined by Mr. Vijay Kumar. He's MD and CEO NCDEX. Thank you, gentlemen, so much for joining us today. I want to start with you, Mr. Kakra, and you're engaged actually with almost all stakeholders when it comes to agriculture as a sector. What are your initial thoughts or reactions to what we heard in budget when it came to agriculture?
Yeah, thanks. My initial reaction was that, the budget is maintaining that steam for reforms in the agriculture sector. So we've been seeing that last 3 years, the same kind of reforms have been there, which primarily focuses on different levers like strengthening the farmers and facilitating the farmers, particularly for their crop production as well as transactions. And this year also we saw that there were initiatives for the farmers. The other thing that I saw was that the basic facilitation infrastructure is getting strengthened. If it is in the form of rural infrastructure or in form of say enams getting more prominence with those 1,000 markets to be added into it, or in terms of the WRDA to create a ecosystem for assaying, logistics, etc. When you look at the commodity business, these issues are something which are impacting the farmer at different stage. If you cannot have good quality assessment or there is no logistic support, they actually tend to lose. And the same happens with the other stakeholders as well. It's different that everyone has a different absorption capacity. But the other initiatives like Operation Green also got me thinking that these perishable commodities are also getting some bit of support, because increasing it to 22 commodities would help farmers, especially those who are into the vegetable segment, who have a smaller produce because of the marginality of land, and they would actually be getting the benefit out of it. Because of higher logistic cost, they're not able to sell it to distant markets. And the cost for perishable for cold chain is as high as 100 rupees per kilometer. So that's really something which is a detriment and needs to be improved for a better profitability of the farmers. The other thing is the last thing that I would like to mention is about the allied sectors, which is the fisheries as well as the livestock farmers. Now having infusing credit into those segments, that's also a great move, which will help these segments to come and get at par with the normal crop production farmers. So that's what I believe, and I believe that it's maintaining that same stream of reforms across. I'll pause
All
here.
right. Okay. Mr. Kakra, how would you actually rate this budget when it comes to agriculture and the implementation of it?
So yes, from an implementation perspective, I would say that usually in the budget, the main announcement would be on terms of budget allocations. But yes, you're right. There has to be a very strong implementation framework, because if we are looking at inclusion of different segments across the value chain, then definitely a strong implementation structure needs to be done, be it for facilitation of the infrastructure that is getting created, or utilization of funds through the agri cess, which has been announced. All of that would require a very strong implementation mechanism, and I find that that is an area which can be leveraged through digital initiatives, and probably that can become a stronghold for agriculture sector, because the sector has been lacking in digital initiatives. So while implementation is important, we also need to have a digital infusion of digital initiatives in the agri value chains, so that at the center of it the farmer is there who can actually gain from it. And other thing is more from a grievance redressal system, because that's something which is core to any system for becoming successful. Until unless we have a very strong grievance redressal system, we really cannot implement all these great initiatives that we are looking at.
Mr. Rai, a similar question to you, and for a agri intrinsic company like yours or a corporate like yours, when it comes to procuring, what did the budget mean?
I'd like to mention that this year budget also is a continuum of last 3 years budget on agriculture focus. Primarily, this time focus has been on the value addition, and they have added 22 perishable cargo into the value addition segment. The second area, what I believe is the government focus is sustainable agriculture practices. So they are talking about enhancing budget allocation for micro irrigation as well as overall agri-tech startups. That is a special package has been declared for that. And third area, I'll see that very clearly demand responsive value chain creation through investment in agri infrastructure. That is what is going to be very critical. And also this year budget have a background of this 3 Act which has recently got changed. Of course, it is now on hold, but actually this three major change in the Act, along with this additional allocation into agriculture sector, infrastructure, production planning, as well as the micro irrigation and startups in agri-tech startups. These are the area which can go a long way for agriculture production planning as well as the demand-driven supply chain, or you can call it value chain. So these are the area where we believe there is going to be long-term impact. But as you asked the right question that how implementation is going to be and what kind of confidence level we have. Actually, agriculture is primarily state subject. The central government only can allocate the budget and give you the conditions for state governments to use those funds. So I think the critical part of this whole budget is going to be state government specific action plan on the ground. So we have to locate it in every state governments how they are actually bringing out agriculture budget in their own states, because the central government transfer the funds and all implementation happens at the state level. So that's why sometimes we see that the budgetary allocation or the intent of the budget finally when get implemented actually get diluted, or actually the focus gets changed, because every state has their own needs in agriculture area. Some states have horticulture focused crops, some states have the grain focused crops, some states have like sugarcane critical for them. So it's actually get diluted, or you can say the central budget is not exactly used in the farm. The money goes, but it goes in a different way, and the impact are always seen as a very dispersed kind of thing. So I think the current budget is very growth focused, increasing the farmers' income, reducing the cost to the farmers. These are the intent. Also, the allied services, which is dairy and fisheries, I think is going to be very game changer in the Indian agriculture. I'll tell you one example that today people are saying the farms are becoming non-productive and a lot of sandy lands and all that. The fisheries, what can be actually very good use for those lands which are not very productive, and not only in the South India where the traditionally the fisheries has been there, but the Gujarat state or Bihar or southern other eastern part of the country where the fisheries can be a big increase of the farmers' income. So doubling farmer incomes through allied category, as well as the focus on the micro management of the agriculture practices and the agriculture inputs, I think these are the area going to change the whole dynamics of the Indian agriculture. Along with the 3 Act, if it is going to be implemented, which is doubtful, but already government has declared 1.5 years they are not going to implement. So otherwise, it would have been the fantastic package to be implemented in the agriculture sector.
All right. So game changer in many ways, whether it's about allied sectors or value addition or the sustainability part, which the government also addressed this time, is where the focus areas seem to be. Jatin, let me come to you now. And of course, we'll start breaking down on many acts and what its impact would be going forward. But why sowing decisions is something that you have been talking about now. Startups is something that Mr. Rai just spoke about. So when it comes to smart sowing, when it comes to pre-harvest, infotech, how did the budget you thought addressed all of these sectors?
I think more than the budget, you see, there is a theme. Now, some themes happen before the budget, during the budget, and after the budget. I think this whole focus on startup India, and also very, like the focus on agri-tech startup is already changing the landscape very rapidly. Every year on year, you have amazing companies now coming up and innovating in all fields. For example, I'll talk about one. It's called Animal, which is basically a startup which is about trading of livestock. I have a new startup called gramcover.com, which is a rural insurance brokerage. And the fact is that India is a very challenging, peculiar, idiosyncratic agri market. We are a large population with heterogeneity, where scale profitability and margin is very hard to find. And agri for decades has been, in this very limited large agri players, both from the private sector as well as the government sector, and that is rapidly changing. And I think the budget, or let me say the central theme, actually is accelerating that forward. There will be multiple new players in various segments. For example, there are space companies that are launching satellites to have even better interventions on the farm. So I think it's really that is the most important thing that is happening. Technology is going to create the space or the margins for value to be extracted now, and that's definitely happening.
Mr. Vijay Kumar, and that brings us to us. While all of them have explained on what the budget means to them and how it can be, the reforms on how they can be utilized, a lot has happened into agriculture, and you are known as an agricultural exchange of India. How has the budget impacted you? What are the pluses, opportunities that you see come out of this one?
So first of all, I would say that the budget has signaled continuity to support the farmer, and that is certainly endorsed by the increase in the funding from 15 lakh crores to 16.5 lakh crores. So I think that clearly indicates that the government is putting in money and not just words, and also the fact that the agricultural infrastructure, which was announced earlier, now they have put in an agriculture infrastructure cess to directly fund that agriculture infrastructure that is proposed to be built, which was announced earlier, of about 100,000 crores. So I think the fact that there is money available, the money will be deployed to support farmers. And yet, I think there is a need for progress, and the progress is towards profitability. And I think, as Mr. Rajnikant Rai pointed out, that you have to produce what the market needs, unlike the current situation where we are producing surpluses far beyond what the market needs. So that will mean a shift in crops, that will mean moving to other possible sources of income. And I think those signals can best be got from the market. So from an NCDEX perspective, I think what is sought for is progress. Now, while we increase the funding from 15 to 16.5 lakh crores, I think it's very important that the money which the farmer puts in is protected immediately by locking in the farm output prices right at the time of planting. This is not only to protect the farmer, but this is to protect the bank that is funding the farmer. So we don't want at such a large scale of funding for for profitability to be lost and funds to be lost or converted to NPAs. So I think the onus is on all participants, and I think with the farmer producer organizations, one can clearly use this entity to both aggregate crop, provide good infrastructure, reduce costs in the supply chain, and bring in that profitability based on a market-driven pricing signal. So I think that's key. One other area that I think we are definitely excited about is the fact that corporates will, once this competitiveness builds up, then corporates will use that competitiveness to find export markets. Today, India is a leader in certain crops where about 80% of world demand in castor and guar and cotton are met from India. And that can extend to a number of other crops as well. So we are excited by the fact that agri-business will grow, but it will grow from a demand-led and market price-based perspective.
Well, absolutely. And demand really is coming back now. Also, Mr. Vijay Kumar, this practically was the last budget before the government hits onto that 2022 when it was their target to double farmers' income. And while, yes, as you said, the last 3 years budget has been perhaps collated together, there is continuity now. And we've seen a lot happen with the exchange as well in the last 1 year. You have FPOs joining in. You have special products, instruments now for those FPOs. How has the development been there? Do you see more encouragement, more awareness, all of that come in when it comes to trading on the exchange?
Yeah, absolutely. I think the knowledge, if you provide the knowledge and provide the support, which, as I mentioned, both banks and the government are now aiming to do, then the entity, which is the farmer producer organizations, can definitely deliver the marketing and risk management support that is required. So we've done pilots at NCDEX supported by SEBI, which have really proven that, for example, in November, December, when farmers planted their chana and rapeseed, they locked in prices for their harvest in April. So even if prices crash, as far as these farmers are concerned or these FPOs are concerned, they've locked in prices. Now, this needs to be a habit for everyone. It's a price signal given by the corporate that I want this crop grown and not that crop. And if that signal is picked up by the farmer, then he protects himself, and the corporate also gets the crop that he wants at the price that he wants. So I think it works well for everyone in the supply chain. We really are interested in this scaling up. So the government definitely has indicated that it will continue MSP in support wherever support is required. But I think there are other ways for the farmers also to protect themselves, even at prices much above MSP. So when those prices appear, the farmer can lock it in, and it's as simple as that.
All right. Mr. Rai, I want to come back to you. And while, of course, you gave us the pluses of how game changer the budget was in various sectors here, there are 1,000 additional mandis that the government is looking to add to ENAM. How does that help you, support you? Also, the agri-infra and development says, will that impact a lot of your procurement strategies here? How are you calculating or working those?
See, I'll come to the last point first. Says what you are talking is actually it's on the imports, and this 5%, somewhere 15%, somewhere 5%. Primarily, it is to protect the Indian agriculture production. In the certain section like oil, cotton oil, other kind of oil seeds, these kind of things which is getting imported in India is actually at the cheaper price, impacting the farmer realization. So the aim of putting the basic duty on the various imports, primarily it is for the purpose of protection to the Indian agriculture and the farmers' realization. So that way it has been good for the agri industry. And this has been calibrated on the basis of competitiveness and how the Indian farmers can be protected from the sometime glut of the situation and the price falling to the very, very low level compared to what government is offering. The mandi part, what you are talking, actually in India, 6,500 mandi covering 6,50,000 villages. If you see the dairy industry, which is almost 8 lakh crores, is managed by the 3,50,000 collection center in this country, versus 6,000 mandi is covering 15 crores farmers or 6,50,000 village produce. So India require many fold of aggregation center, you call it, or you can call it mandi, or you can call it any other platform. But digital, what will do, ENAM kind of situation, it can be ENAM connected to the mandi and other private buying centers, as well as the farmer aggregation centers or FPO groups. If that is going to be connected through the ENAM platforms, then this physical infrastructure challenge is what Indian agriculture is facing today, our farmers are facing today, actually will be addressed. Today, I like to give you the example, 50% of the farmers' produce getting sold in the village to the traders. Less than 50% farmers actually goes to the organized place for selling their produce. So the 50% farmers anyway operating outside the mandi, or even 50% produce is also getting sold. And trader, what he does, buys from the farmers, goes to the mandi, he aggregate in the village, goes to the mandi and sells to the marketplace. So I believe that the ENAM is going to definitely help for connecting rural India to the market, and it will be low cost kind of support to the farmers. But end of the day, physical transaction has to take place. So ENAM is the digital platform. It's not actually digital per se. Digital for the market discovery, digital for connecting the buyer and sellers. But physical activity, what is the quality assessing, physical transportation, logistics. So I call it ENAM is actually physical platform, and that is what India requires in the agriculture sector.
Mr. Kakra, how would you look at the ENAM? And the other really is about the evolved versions of APMC that we're talking about, because while the government, of course, has increased the Rural Infrastructure Fund, and some part of that can be utilized by the APMCs as well. So how do you see that going forward and working?
Sorry, come again. I couldn't hear the last part of you were saying.
I was asking you about the APMCs and the ENAMs. How do you see these versions working together?
Okay, so in my view, both are complementary. I mean, there's no way of looking at it as a antagonistic kind of a thing. The mandi basically is the physical version of it, and the enam is the digital version of the entire thing. So I believe that they have a lot of complementarity which can be leveraged, and the whole idea of creation of enam was basically to create a free flow of trade across the markets, which were currently only in the physical form. So that's like an advancement of services, as well as advancement of trade in terms of agri commodities. So this one thing, which is the physical part, which the APMCs does, while the enam will be supporting on the digital part. And I believe that the greater the coverage of enam happens, the better it will be, and the better it will be for the farmers or the traders who are actually utilizing these services. So it will open up the market, and it will not let it get restricted to the physical boundaries of the APMCs. And in case of the cess that you're asking about, the coverage of the APMCs under this infrastructure fund, so that's also a good move, because somewhere the APMCs were feeling lost because of the agri laws that were being passed, and in terms of their vision, and in terms of their utility in the agri value chain. But this is actually helping them, because APMC has need fund for maintaining the infrastructure, and if they are included in the agri infrastructure fund, they can definitely maintain the infrastructure. It's already a well-oiled machinery which is working in India,
Right.
and if they can sustain themselves, that is what would be the support which will be coming. So we have the entire physical infrastructure working, and enam expansion, the more it expands, it will cover the physical mandis, and that would be something which will create a network across India. And I believe that this synergy will help farmers and the agribusiness trade on the whole. We can see that maybe after 5 or 10 years, when we have, say, 80% coverage under the enam, you can see that a lot more trade and a lot more transparent trade would be happening. which is both trackable in terms of physical movement as well as in terms of quality and also in terms of transaction. So that's something which is good for the agri sector, and probably it will be picked up by large corporates also in a big way once the mandi integration starts to ramp up.
I think that's a question we should ask Mr. Rai immediately. All right, he has a technology issue there, but I get your point. Mr. Kakra, until the time we get him, ENAM was launched in 2016, and as you said, by the time we actually see this integration, could be 5 years or more. The kind of development or the kind of progress that we've seen until now, how happy are you with that?
See, all innovations have got their own, I would say, life cycle. And ENAM has gone through the initial phase of its life cycle, where the most difficult part is crossed, which was convincing the trader and the farming community to adopt to the digital part and instead of the physical part. So that was the most difficult part of it, and that has already gone. So now I
Okay.
see only a upside towards it, because awareness wise, understanding wise, a lot of people in the farming community and the trading community, they understand what enam is, what's its construct, and how it works, how it operates. Yes, there would be a constraint that it may not be covering all the delivery centers where you want, or it may not be covering all the commodities, but that's like a evolving evolution process, and it happens with all new initiatives. But so if you ask me, in one word, I would say that it has crossed the first initial teething stage, and now it's more of how we scale it up and how we are able to get the faster adoption. So that's the basic underlying principle. The more the adoption, the better the outputs and results.
Let me move on to the warehousing part of it. And the finance minister did touch upon enhancing the role of WTRA in sense of regulation, structuring of the post-harvest. Jatin, how do you look at that? I mean, the last question to you was about pre-harvesting, but post-harvesting is even more important with all that produce. And WTRA has been asking for as a regulator for some time now. With the kind of push that the finance minister has given, what is there to expect from here on?
I think the focus on warehousing has been there. There are lots of great companies like Arya Collateral that have come up. NCMSL is also, it has been there. It's also growing. Though this is controversial right now, but the removing of stock limits is very important. That will allow in the planning of warehousing and the spread of it. Also, the idea that maybe there should be warehouses closer to the farmer. And also the technology within the warehousing for perishable items, of fruits and vegetables. A lot of people are working on sensing technologies, including cold storages, where there's tremendous amount of startup activity. So there is a convergence right now, both from a policy perspective, private sector investments, removing hurdles. Because if we want a solid supply chain, if we want to be able to provide quality, if we want to be able to export, if we want to be able to maintain standards, then this whole warehousing infrastructure has to become more tech enabled. The logistical connects between the warehousing, that is from farm to silo to consumer, also needs to start getting sorted, and it's a function of legislation, it's a function of technology, it's a function of capital. And I think all these things are going to come together, as someone said, that the state government has to play a very important role, because we have a national warehousing, we have FCI, we got state warehousing corporations. There are lots of vested interests there, lots of subsidies linked to it. We don't know what is the wastage. You try to touch it turns into a political firestorm. Whereas there are investors, there are certain bitter investors also in the market who've been here in warehousing for a long time and have not been able to find scale. So this is the time, and there is I think the fact that there is private capital and startup capital and young blood in this rather traditional business is actually going to take a lot of the risks and try to bridge the gap between state expectations, farm expectations, and central regulation for it to happen.
Mr. Vijay Kumar, I remember whenever we've had, I clearly the theme of conversation tends to keep changing. I remember asking you what is the importance of futures and spot integration, and why is it not happening? And we've spoken about on how the futures market are more, synchronized and not the same with the spot markets. The whole theme now really seems to be shifting to Atmanirbhar farmer and how the exchange has made good of that opportunity as well. So from here, what is the road ahead? How do you see the coming years as?
Yeah, so just let me just touch on this WTRA strengthening bit, which you had asked earlier. So I think this is really a significantly important development, because, as you know, the exchange had already moved completely to ENWRs, which are electronic negotiable warehouse receipts, which are electronic title, fully regulated by the WDRA. So all the stocks that are delivered on the exchange by any depositor are held as in electronic form, with quality and quantity completely tested, weighed, and packed and stored in a safe warehouse, which is supervised by multiple entities. And this is the only way in which that particular lot can be accessed by a national market. So the current APMC structure is all about you come physically, you look at the produce, you throw it on the ground or bite it and figure out what it is worth paying. And that change is transformational. So once what we are doing on the futures exchange, if that becomes the standard operating procedure for all farmers, and then the negotiable warehouse receipt is available for purchase, whether by a corporate or by the government or by a local processor. It can be done on any platform. It can be done on NEML, which is one of our subsidiaries, on ENAM, on eChopal, which is run by ITC, etc. But that consistent, it's almost like a DMAT share, is tradable across the country, across different exchanges, across different cities. So that consistency of one title being transacted on a digital platform is important. And I think, as was mentioned, it is the digital layer is like the UPI, which ENAM has created, but many other marketplaces can be connected to ENAM as well. So I think that's the first aspect, and that will encourage the spot markets to really be efficient. And related to that is, it need not be stored in gunny bags. We are producing 200 million tons, which in any other country would be all stored in bulk. And so the cost of all this handling and movement is borne by the farmer, and that needs to change. And hopefully this agri infrastructure fund will change it for the spot markets. As far as the futures are concerned, as I indicated, it is critical that anyone who is financing the FPO, financing the farmer, builds in this aspect of price protection, because marketing is not a post after you harvest, you wonder where you're going to sell it. It is a decision right at the time of planting that you have to make, and you have to choose the crop which is going to give you a profit. So I think all these are very related aspects, and the development of all these is happening simultaneously, and I think that's the good thing. So we are certainly looking forward. There seems to be a pause on some of these laws, but I think everyone will see that all these moves will finally help the farmer move to a brighter future in the years ahead.
Jatin, you spoke about the startups and how there are many now. We spoke about the technology part as well. There is some young blood coming into commodities, rather agriculture, which we saw missing for some time. There is some infusion of capital as well coming in. The finance minister also talked about the private-public partnership, which we perhaps listened to for many years now. What do you see as road ahead now? Because the whole theme of agriculture really seems to be changing now with the government's push in sense of warehousing, the development, infrastructure, etc. There have been a lot of raving reviews coming in that the government did not give free subsidies to government this time. They actually gave them infrastructure. So that has been an ask for a lot of time. Do you see the whole theme changing?
I think, you see, this is a conservative government. I think we are going to see a decade of policy change, a very difficult policy change, from giveaways, subsidies, free power, free water, cheap seeds, to agribusiness. As a country like India, it's a very difficult transition to make, which we have to make without leaving off people, because we have a system. See, we are a country, agriculture, was conceived at a time when we used to have famines. That is what we tried to attack, in which we kind of achieve our food security. After that, the agri-business part, and it's an agri-business in a new digital age. I think the policies are running very fast right now. If anything, you've seen this so for example, Pradhan Mantri Fasal Bima Yojana. It's a great policy, but it's very difficult to implement because there is an expectation that where the ground cannot really match up to it. I think this gap is where a lot of the vision and execution, where startups are going to fill it, because you need to be nimble and be able to remake a strategy. Rural India is challenging and difficult. And you see that is happening. The focus is on I'm oversimplifying this: agribusiness, find a surplus, sustain it, as opposed to government putting in capital, which we've tried, which to a certain extent was needed when we were poor, and we did not have resources. But now we really need to extricate ourselves from that situation.
Oh, yes. There have been reports out, and I'm sure Mr. Kakra would agree with that, that the kind of procurement and with the kind of spend that the government is doing on agriculture, whether or not it is sustainable for the years to come, has clearly been a question mark there. But I want to move this discussion forward, and this is a question to all of you, and I'll start with you, Mr. Kakra. We are talking about so many platforms right now. We're talking about mandis, ENAM, APMCs, procurement, WDRA. There's a lot that's happening in agriculture, and as Jatin said, it's slow, but it's moving in that direction right now. So when we have an exchange, since we have the exchange right now, and that is where we are doing this conversation, how do you see exchange be able to, way much more, make a more meaningful, even more higher impact from where we stand right
now? So my view would be in this situation is that there are a lot of initiative which is happening. But in order to achieve the maximum synergies, we probably need to look at a better consolidation and integration of these initiatives. We all are trying to achieve one goal, which is a better farming experience for the farmer, and also development for the sector, while profitability and other commercial objectives are there. But it can best be achieved when you look at consolidation of initiatives and compatibility. That becomes a very big question. So I'll give you a small example by which you can understand that we have a startup who is doing the assaying and quality services for food grains. Now the startup has got good technology, but where does the issue come is that, is the certificate being given through that machine which they have developed, is it acceptable and compatible with the regular procurement system and the machinery of the state or the government? Now, until unless those kind of doors are opened and we take the technologies and the innovation and bring them to the mainstream and make it more compatible, this solution cannot be realized. I mean, the maximum benefit cannot be realized. The other thing is a very high adoption of technology is required. I'll give another example here, which I said earlier also, that say for cold chain logistics, which all of us know, it's a very high cost to the farmer, to the companies, to all the stakeholders. I mean, if I have to transport apple from say Himachal to Mumbai, it will cost say around 80 to 100 rupees per kilometer. Now that's an exorbitant cost by the time. Or if you take an example of say strawberries or cherries, now once they reach Mumbai, they are already up. The prices is already up by 40 to 50 rupees a kg. Now that actually makes the entire interstate trade or inter-market trade unviable. Although it is happening, I'm not denying that it is not happening. Now we need to look at infusion of technologies, both in terms of saving this cost, maybe in terms of the fuel cost or in terms of the cooling cost that is being done. Now that's where the whole post harvest, I mean, synergies and cost reduction can happen. So one thing I would say is compatibility. The other thing I would say is adoption. The third thing I would say is maybe diversification. With ongoing usage of agricultural lands, and with a lot of climatic factors impacting those agricultural output. Now it is time for everyone to rethink on what kind of crops are we growing. Is it really profitable, and is it not really happening for us? So that freedom to diversify should be given to the farmers. Let him test it and let him diversify, and then probably he can actually look at. The last part I would say is that if we want really good increase in the productivity or the profitability, we need to have a very good mechanism for controlling the prices of commodities. Every year we see that the prices of commodities, when the season begins, it just plummets down, and it actually leads to all the losses. Even the cost of production is not recovered. I mean, is not a secret. So that's something, that's a big challenge which everyone needs to look at. And once that is being done, then probably equitable distribution of commodities can happen across consumption centers, and this price issue will develop. Stable price will develop a lot of trust in the farming community for being there in that same growing into the same commodity. Otherwise, they would definitely like to find newer ways of getting into new other commodities which can yield them better. So that's these are three, four thoughts that I have.
Very well put, Mr. Kakra. Jatin, why don't you go next and tell us, and what are the opportunities that you see going forward, and where do you see exchange also, being a part of this in the whole piece?
I think Mr. Kakra was talking about the most important thing, that the problem is, with commodity pricing. I think the fact that you can hedge your price on the exchange itself, I think there is a lot of focus, and I think that should be opened up. People should be able, basically, MP tried Bhavantar, it didn't work, but there has to be other ways of doing this. China has a system of price insurance. I would think that it might come up as an official policy in some states. But if we could have a way to hedge price where we lock in prices, and both the buyer and the seller are pretty much sure that you deliver X commodity, you're going to get exactly the same price for the same quality, is the most important thing. It's a financial innovation that has happened. It's going to come either from the exchange side or might come from the insurance side.
Do you see opportunities coming, and how would you want to add to this?
Come again? Sorry, I missed you.
That question was for Mr. Rai. I mean, how would you want to build up? How would Mr. Rai want to build up on what Mr. Kakra and Mr. Singh said?
Yeah, my view is that Indian agriculture has suffered a kind of vicious cycle of addressing each node at a particular time. It is not seen as a holistic value chain approach. Indian agriculture require technology, of course, is critical today world, because you have to deal to millions of farmers and very dispersed locations. So technology only can bring together and create the economy of scale. So technology can play those kind of role, whether it's input or output side. But I believe the value chain approach from end to end is whether productivity enhancement, you require a technology impact intervention, you require mechanization, you require supply chain innovation, whether warehouse, bulk handling, as well as quality attributes are again going to be very, very critical part, because we have to produce what market wants. Till today, Indian agriculture has been focused towards supply side of the market. Actually, you require consumption side of the market to reach to the production. So you have to align your production to the consumption requirement of the market and build your supply chain according to that products, what you want to service to your consumers. Because end of the day, consumer has to pay the price or pay the cost. If the consumer is not willing, because today all our commodity is the costliest in the world, whether it is a grain, whether it is a milk, whether it is any other item, vegetable, fruits, we are uncompetitive most of the crop today, because our supply chain cost, our production is so low, our input cost is so high, and a small scale producer, it doesn't create much surplus to trade. So I think holistic approach require end to end, and market linkage is another part which is missing in the whole government scheme. Government is talking mandi, outside mandi transaction and all that. But what Vijay was mentioning, actually in India, option, future, today we don't have option. We have only future. Future doesn't protect. There is no insurance. Who will buy side? Who will come and buy? So I think is the options in this commodity market is very, very critical. Unless you have the options, there will be no underwriters for the 12 months ahead for future pricing. So I think options required, institutional kind of framework which can provide. Then only anybody can go and commit advance price to the farmer with a certain kind of cost built in. And he knows that this is going to be my end of the day downside. Farmer also can be protected. Otherwise, today, if I go and have a contract farming with the farmers and fix the price, and I go and hedge in the futures market, it can be double-edged sword. Sometimes it will cut both sides. You lose from the market, you lose from the farmer as well. So I think is the holistic approach required, end-to-end, full value chain required to be measured for the efficiency point of view, cost effectiveness, as well as the platforms, institutional platform like NCDEX and all that, where the risk can be hedged. Just advanced future pricing will not help. Somebody will be loser in this game. You have to bring where both the parties, producer as well as consumer, is going to be protected. So these are my certain points on this.
Well taken, Mr. Rai. Mr. Vijay Kumar, the experts have spoken about globalization, financialization. We're also talking about supply chains, market linkages, and of course, opportunities when it comes to cost saving, efficiencies for the stakeholders as well. Options, Mr. Rai, clearly are being traded, but not in so many commodities. So, Mr. Vijay Kumar, the question to you is on how can exchange fill these gaps, and what are the plans that exchange has when it comes to many of these agri commodities and making use of the budget reforms as well?
Yeah, I think as I mentioned, following SEBI revising options to produce to allow options in goods, so we have direct options available on the underlying commodity itself. So we've launched those in a number of commodities, and I think the tool is available. And I think, as was rightly pointed out, that the farmer or the farmer producer organization should not be taking risk. They should be locking in the margins. And there are financial players who know how to take that risk. There are other people who have the money and are willing to enjoy the return and bear the risk. So I think those are the people who are available in the ecosystem, who are willing to underwrite the risk because there is return also. And I think what we are seeing now is that banks are going to play an important role, and so will the government, because it is a small value, which is almost like an insurance premium, which is paid for the farmer to lock in that price. And the person who's earning that premium, he's bearing the risk, and he's capable of handling that risk, not the banks which are lending money, not the farmer who's borrowing the money. So I think this risk transfer from people who should not be bearing that risk to people who can, I think that's what the exchange facilitates. And we are fairly confident that this will increase. And to some extent, I think RBI hopefully will move from just guidance to mandates, because as we all know, when we buy a vehicle, the car has to be insured. You cannot drive without a car being insured. And despite that, when it comes to renewal of insurance, it's pretty low. 60% of cars flying on the road are insured. And this is a dangerous aspect, which with, as I said, if 16.5 lakh crores is going to be the funding, it needs to be protected. And I think this mandates for risk management should kick in, and support for the farmer producer organization to undertake such risk management is also critical.
That point is well taken. Before we, conclude this session, we have time to take a couple of audience questions as well. And there's one from Pranoti, and she's asked that the COVID-19 situation, how has that affected this year's commodity budget, or rather, has it affected the commodity budget at all? Mr. Vijay Kumar, would you want to take that?
Yeah, I think one of the bright spots, despite the COVID situation, has been agriculture. It has grown and it has been resilient. And I think the government has definitely helped in terms of increased procurement during this period. And I think the agri-food industry has really demonstrated resilience as well. They have been there to buy from farmers and continue food processing. So all in all, agri-food has been a shining star in this otherwise dismal period. So we are really pleased about that. There have been some physical interruptions, but by and large, it's recovered fairly swiftly.
Well, absolutely. Mr. Kakra, the same question to you with a slight twist, really. When you saw the budget and when you saw the agriculture highlights that came through, did you think it was impacted by budget, rather COVID-19 in any sense? Would it have been different if 2020 wasn't a COVID year?
Yeah, so yes, the first reaction was that as compared to last few years, the budgetary allocation has gone a little different. That was the first reaction, but then definitely there would be certain reasons because of which this has been done. I'm quite confident that, but my confidence is coming from the fact that the stream or the thread of reforms is still continuing. The focus has not been lost. The sector continues to be on the forefront. Even if you look at it outside the budget, there is a huge lot of allotment which has been done for improving the agriculture sector. And the other thing which was like a really good move was this agri cess, and that cess is coming out of the diesel and the petrol consumers. Now that is actually broad basing the agri funding requirements, and it is coming from all, the general public. So now it will actually be a kind of a perennial solution if it is implemented properly, that you will never face a scarcity of funds. Now, how it is getting allocated, to what heads it is getting allocated, that might be a different question. But that was probably a masterstroke where we can understand that you'll have a continuous inflow. Every year what happens, there's a budget, it is getting consumed at within the year. But now your input, or rather the funding, would be continuous. So that's a continuous stream that has been allocated to agri. So that was a real good factor. The other thing was that, I was happy to understand that in, say, Operation Greens or in infrastructure development, there has been greater focus, because these are certain pain points, perishables particularly, where there is no way you can, there is no technology by which you can actually increase shelf life beyond a certain limit. So it is either you can sell at certain point of time before it expires, or you run a loss. Now that's a high risk business, and if it is getting under the Operation Green is expanding its ambit, that's really a good thing, and I'm sure that especially the small and the marginal farmers will be able to get benefit out of it. And the more it increases, the better it becomes. And the other thing that I was also looking at is that we still have focus on say micro irrigation, which is again looking at a certain bit of climate change. But I believe that yes, there should be more focus on how climate change is impacting the agri crops or agricultural value chains. It is becoming more and more serious with lots of climatic events that is happening. So that's something I felt that it should also be covered. But yes, there's always a limitation. But with this sales part, I believe that a lot more heads would be covered under agricultural sector, which probably could not be covered under, in the budget or in the previous ones, because of the funding constraints. So I think that's a very positive point. I take that as a very good thing happening.
All right. So COVID-19 did have its impact on budget and in various ways as well. And because Mr. Kakra was talking about climate, and I was thinking about you, Jatin, this is a question we can't let you go away with. So, climate is going to be important for various commodities going forward. And agriculture, of course, is most impacted by it. Irrigation, water stress districts. The finance minister talked a lot about these as well. What has been your take on those subjects?
Sorry, I again missed you. About so I got pieces of it. Sorry, there was an audio.
I said the finance minister also touched subjects about micro irrigation, about water distress districts, and climate is something that Mr. Kakra spoke about in detail right now. Your take on all of this?
I've always said climate change in India should be seen as a national security issue. If you look at, Manisha, we've been talking for almost a decade now. And if you track between 1900 and the year 2000, there was one drought per decade. Between 2000 and 2020, there have been 5 droughts into 2 below normal years. Not only that, you're seeing a massive variation. So from 4 or 5 years of below normal and droughts, you suddenly went in 2019 to about 110%, which the last time we were 110% was in 1994. And also that majority, and I'll tell you, 2019 is a very peculiar year because till the middle of July, monsoon was below normal by minus 20%. Then not only did it make up for the deficit, it went to an excess of 10%. That kind of rainfall regime is not good for any crop. That's why you've had issues with soybean back to back in MP. This year also, you had August, which is a very important month for the monsoon, which is about 29% of the total LPA, down by minus 10%. So people had started touching the monsoon, and the end you finish at 109%. So you get issues where you have one geography which till mid-July could be suffering with near drought issues, and by the end of September and October, it is actually suffering with excess rainfall, even post-harvest losses. And I really think that we're really in a situation where not only do we the key thing to understand when it comes to monsoon is, if you average out precipitation, normal and above normal is generally good for the country. So you're seeing great agricultural production growth in 19 and 20. A lot of that is because there was excess rain. But you have these pockets of distress that get created. So one way of dealing with that problem is micro irrigation, water management, and all that. The other is financial instruments, where exchanges are very important. How, through credit, through insurance, through exchanges, do we trade in losses, where there is supranational kind of system that the government puts, and then there are NCDEX, then there is credit. Credit could be linked to the as Mr. Vijay Kumar was saying, that if you're going to put about $250 billion worth of credit, that is what the value of the amount of money that goes into agriculture every year, there has to be some kind of insurance on top of it. Now we do have PMFBY, but that is not all pervasive. Right now, crop insurance is an opt out. I think you have to opt out of it, and every state works at it differently. At least there has to be some layer that transfers these kind of climate risks.
Oh, well, yes. I'm sure Mr. Vijay Kumar, while of course is keeping a lot of eyes on a lot of things when he runs an agriculture, exchange there, but keeping an eye on sky is yet another thing I'm sure he's getting very, very good at. But we have another audience question coming in, and this one is from Nikhil. He says he wants to ask on how has the budget helped in growing the agriculture industry? Can the farmers get a good mandi rate now? Mr. Rai, would you want to answer?
Government budget primarily helps in infrastructure area, whether irrigation, whether it is warehousing, whether it is market making. So that way it helps a lot. Where price realization is not related to the budget directly, of course it helps farmers to get better income because of the higher productivity, because of the lower cost in transaction. So that way it helps farmers realization better. But it's a market-driven discovery of the price. So the price is related to the market consumption, the kind of other total growth of the country. If the consumption goes up, the farmers get the better realization of the produce. So I think directly there is no correlation, but definitely it helps in the farmers' income enhancement, and as the GDP of the country goes up, the prices actually inflationary impact will be there. So that way the realization may be better.
Mr. Vijay Kumar, you want to answer that as well?
Yeah, I think one of the things about options, as was referred to, is that it gives you the best of both worlds. So it is currently, there is a tendency to just grow and assume that you will get good prices. Instead of doing that, I think there is a need to lock in a particular price using options, and that gives you downside protection. But if the prices do go up, then you're not constrained by the option. You can go and sell your product in the market and get the higher price. So I think this instrument is really serves farmers, because they are bearing all the risk to feed the entire country. And I think support to use such instruments are critical. And we are definitely looking forward to wider adoption of this, and for agencies, including NABARD, for example, to support this familiarization of these instruments by farmer producer organizations. And we have been encouraged by the progress so far, and we believe this will scale up significantly, because it is only it's very easy to us to think that there should be a stable price. Markets don't work that way, whether it's crude oil or whether it's gold or whether it's chana or soybeans. These are commodities, and supply demand does move prices around. And so the best and prudent way for farmers and farmer producer organizations is to de-risk themselves, and still options give you the benefit of upside. So as Mr. Rai mentioned, it is a far better instrument than futures, and we are looking forward to its use.
All right, gentlemen, it has been a very enriching conversation where we've tried to decode the budget, and what has been done, what needs to be done is what we've discussed here. But before I let you go, I actually want to come to each one of you with a line on what opportunity do you see going forth from here, and what is still desired to be done in this space to make it where we actually want to see it. Mr. Vijay Kumar, I want to start.
Yeah, I think I would say historically, for some reason, Reserve Bank has kept banks outside of commodity exchanges. And of course, it has changed a bit of that by allowing bank subsidiaries to take on brokerages of and be a broker or a member for commodity exchanges. I think it needs to move one step further because of this large credit. It is the banks that can help these farmer producer organizations by doing exactly what they do for crop insurance, by buying options or encouraging FPOs to buy options. So I think just banks can play such a large role, because it is banks who are lending this large quantum of money, and it helps farmers and it helps the banks themselves. So I would think changes from Reserve Bank as either mandates or stronger guidance than what they've done earlier will definitely transform this ecosystem.
All right, Jatin, you go next.
Financial technologies, credit, insurance, exchanges is going to go and make sure that everybody starts using it, going down to the small and marginal farmers. We have 4G, 5G is coming, and that should be allowed to de-risk, bring transparency in a much. It's a small price to pay for a big bank if you do it properly.
Mr. Rai.
Physical player. So I'll talk about physical kind of things. Open up the market, remove the restriction, make it freedom of choice to the farmers to the way they want to produce and sell, make the trade open to buy anywhere they want. So these are the things I'd suggest, that freedom of choice to the trade. That is what is going to be critical for this industry.
All right, Mr. Kakra, you have the last word, final word.
So I would say that see our agriculture sector is should be a farmer centric sector. So while we are doing the FPO formation, it's a very new entity, and there is a lot of questions in the mind of banks and other lending entities. So what we need to do is probably need to have a very clear structure or clear rating, really clear credit assessment structure for that, where you can rate these FPOs and actually support them through lending. Because of limitation of collateral, they're not able to get the regular finance. So I would come to the second point, which is the product innovation. How we can actually develop products which suits the requirement of a FPO or a small farmer or a small entrepreneur, given the fact that this is a highly risky cyclical nature of the industry, and the collateral may not be there with them. So how do we actually do the product innovation and create a assessment structure for the FPOs? And that probably would be the first step of solving this entire jigsaw.
All right, those are the final golden words coming in from our panel here, right from involvement of banks to removing restrictions. And as Jatin said, financial technologies and product innovation and credit finance is what Mr. Kakra said. That is what we're looking forward to yet in the agriculture space as we move forward from here. But that's all that we have time for. We thank you so much for joining us on the panel and participants as well for joining in, listening, and putting those questions as well. With that, it's certain. Thank you so much.
Thank you.
Thank you. Thanks a lot.
Thank you.
Thank you.